For many investors, the idea of a traditional 60-40 portfolio is likely something that they grew up hearing about. Well, my guest today challenges that traditional split and says that certain investors may want to consider looking at hedge funds. We're going to get into the whys and the hows on this episode of UBS Trending. Hi, everybody, and welcome to UBS Trending. I'm Anthony Pastore. Thank you so much for being with us. Welcome my colleague, Joe Scortino, the head of investments Americas for hedge fund solutions here at UBS Asset Management. Joe, great to have you in the studio.
Thanks for having me.
Looking forward to the conversation. We were just chatting a little bit beforehand. You know, I grew up, and you did too, like the traditional 60-40 portfolio split. But there's some challenges to that, and especially in this environment. So maybe you can share with our audience, before we get into that, like your position in the industry. We're talking about hedge funds. We're talking about the game that you have been in and the work that you've been doing for most of your career. Share with us a little bit about that.
Yeah, so my group, Hedge Fund Solutions, is one of the oldest and largest groups in the multi-manager hedge fund business. We run over $45 billion in assets. Our group has been around for nearly 30 years. So we're one of the most important allocators out there. We have over 70 investment professionals located worldwide doing market research, investment due diligence, manager selection. We cover all of the strategies everywhere across the globe. And we've been doing this for a really long time. We've seen a lot of managers come and go, strategies come and go through different market cycles.
Yeah. You were just telling me before we started today that, a few years ago there were, like hundreds of different managers, and now it's a much smaller group. So congratulations on staying the course and all the success that you've had. Here's the question, because today's market is really interesting and for a lot of investors has proven to be a little bit challenging. There's some questions about what the Federal Reserve here in the U.S. is going to do. Are they still going to cut rates this year at all? Are they going to raise rates again? We're watching Treasury rates climb yet again. Mortgage rates are going up. The equity markets are volatile. When we're talking about the hedge fund side, where are the opportunities there with the market that we are in the middle of right now, all the things that I just rattled off?
Yeah, I mean, it's interesting. The hedge funds, for the last 10 years, we've really been in a difficult market for what we do. We've had 10 years of low rates, low volatility, low dispersion. When you're running an actively managed long-short strategy, there's not a lot of opportunity for you there. But when rates go up, it creates volatility, creates uncertainty, creates dispersion. And hedge funds really are able to take advantage of that, right? We run actively managed portfolios of actively managed strategies that are highly diversified, and look to take advantage of that dispersion.
Yeah. And with a long-short fund, as you describe it, and you'll do a better job than I would, explain to the audience exactly what it is, because it's like you're looking at, you're long on certain companies in the fund, and then you're short on the companies that you think may actually not provide the best returns.
Yeah, so the simplest example would be in a long-short equity or credit environment, right? Higher rates means higher cost of capital. It means higher inflation, means higher cost of goods. Some companies can handle that. Maybe they have lower leverage, maybe they have more pricing power, and other companies can't. So when you're in a long-only traditional strategy, you want the entire market to go up, right? But for us, we want those winners and losers. We want that dispersion because we will be short, meaning betting on companies that aren't going to make it or are going to have poorer performance, and companies that are going to have make it and have better performance. And that spread, or alpha as we call it, is what we're trying to capture.
Right, and that's the beauty of being an active manager, is you're actually looking at all of these other hedge fund managers, you're actively monitoring the fund, so that's the benefit of that comes in.
And to be clear, it's not just equities and credit. We're looking across rates and FX, we're looking at macro trends. It's a really wide breadth of strategies that our team covers.
Right, excellent. All right, good. So let's talk about the role that hedge funds actually play in a modern portfolio, because I started out by talking about the quote-unquote traditional 60-40, which I think a lot of folks out there have heard of, or they probably had that conversation with their financial advisor. How do hedge funds fit into that 60-40 that we talk about so much?
Right. Well, if you look at the environment today, it's really shifted quite a bit, right? So if you think about last year, right, we started the year with markets thinking about heavy rate cuts and maybe recession. Then we shifted more towards a soft landing. And then more recently, the rhetoric is around higher rates for longer, higher inflation, and this seesaw battle back and forth. Well, what's resulted is higher correlation between traditional assets. So if you look at the correlation between fixed income and equities, it's at the highest range it's ever been. So when you think about a 60-40 portfolio, that high correlation, it doesn't really work. You need to look for something that is going to provide uncorrelated returns. And that's the aim of hedge funds. We really seek to provide diversifying strategies, uncorrelated returns, and through that alpha generation.
Do you think the 60-40 is like old news? Is it dead, or is there still room for it in a portfolio?
Yeah, no, absolutely. There's room for it in a portfolio, but I think investors have to be more creative in how they think about implementing that 60-40. And I think hedge funds have an important role to play in people's portfolios today. I think having that 40 that allows you to be uncorrelated really allows you to stay in the 60 where you're going to have the income growth and generation. So I think the 60-40 just has to be rethought into a modern, portfolio theory.
Right. AI isn't just artificial intelligence; it's also, alternative investments. And so I think that obviously there is
The original AI.
The original AI. I like that. We should probably name this show the original AI. So Joe, you mentioned earlier, you talked about how you've been allocating to hedge fund managers for nearly 30 years at Hedge Fund Solutions. What do you think the keys are to navigating? We talked just before we started about the financial crisis from 2008 to 10 and managing that. And now we've got this other kind of environment that we're in right now, this inflation-heavy environment. How do you navigate all these different markets and the challenges that arise during those periods?
Yeah, I think that, again, the last 10 years have been easy, right? It's the rising tide, rises all boats. I think that now there's a lot more challenges, right? So having the depth and experience that our team has is a distinct advantage. It's also nice to be 45 billion and have access, access to managers, access to strategies, access to information, and that allows us to make better decisions.
Excellent. Joe, thank you very much. I appreciate you coming by. And it's always nice to talk about a topic that's a little bit different than what we do here, to kind of give investors a really more broad look at opportunities in the markets and something they should be definitely talking about with their financial advisors and find out if it's appropriate for their portfolio. So thanks for doing that for us, Joe.
Anytime. Really enjoyed it.
Great. Joe Scortino from Hedge Fund Solutions here at UBS Asset Management. And for more information, we'd love for you to visit our Insights website at ubs.com/views. There's lots of great information up there from Joe and the rest of the team and our partners in asset management, as well as our Chief Investment Office here at UBS. And make sure to follow UBS on social media. We're on all the major channels: LinkedIn, Facebook, Instagram, and Twitter. You can also check out our dedicated Instagram channel at UBS Trending. Lots of content there. And as I said, make sure if you have any questions about what we spoke about today, talk with your financial advisor. Until next time, I'm Anthony Pastore. We hope you have a great day, everybody, and remember to keep your eyes on what's trending. We'll see you soon.